Welcome to this episode of the Deep Dive, where we're going to dive into the city of Dallas and whether this city can power your passive income portfolio. We're going to talk about why some of the smartest investors in the world are quietly pouring their money into this hot market and see if this is the right fit for you. Well, since we're talking about Dallas and, we're going to go into real estate, I'm just curious. When you were moving to Texas, you went to San Antonio, you went to Houston, you checked out Austin, and you did check out Dallas. Why not pick Dallas as the place to stay? We're going to talk so many good things about it.
I visited Dallas. I really like the place. It's great for business, but for living, I think Austin is better because I like to live in the hills. But business-wise, Dallas is really good.
Okay, that's fair. Let's talk about Dallas and the metrics that truly matter. The city of Dallas in the year 2025 had over 1.3 million people living in it. And it's often referred to as a Silicon Prairie because of its very vibrant tech presence. If you don't know, AT&T is present in Dallas. It also has renowned healthcare systems like Baylor Scott and White Health. It serves as a critical infrastructure for transportation and logistics as it's so central in Texas. Beyond that, it has major financial presence with major presence of Chase, Bank of America, and Charles Schwab within it. And despite all that, there is a growing startup ecosystem in Dallas. And all of that comes together to make Dallas a very diversified economy that mitigates a lot of risk and is very resilient to job market shifts. And that's evident. Take a look at the median household income in Dallas. It's almost $70,000, which is incredibly high for a major metropolitan city around the US.
And I must tell you, the first modern shopping mall was first built in Dallas. It was built in 1931. It was called Highland Park Mall.
If you're talking about the real estate space, there are a couple things that, we always talk about. There is what the IRR is, what the cap rates are. But the fundamental thing is vacancy rates, because that can make or break a deal. So in Dallas, I'm not too sure what the vacancy rates are.
So vacancy rates, what is vacancy rates? Vacancy rates is basically, a number of days for which a property remains vacant in a year or in a particular month. So in terms of office space, when we talk about only office space, the vacancy rates is quite high, which is about 24%. So that means there are so many buildings which are lying empty, or at least 24% of the entire buildings which are there in Dallas are lying empty because that's very high. The vacancy rate for office is very high because after COVID, remember, people stopped going to office.
Yeah.
They are actually working from home and everything. Then the vacancy rates for industrial is about 9%, which is in comparison to...
That's Dallas wide?
Yeah, Dallas wide. In comparison to office, 9% is very low.
Yeah.
So, but I still think that is still high. So if you...
Does industrial spaces include warehousing?
Yeah, it includes not warehousing, it includes large warehouses.
Okay, so
big warehouses.
Factory level.
Yeah, like the warehouses which are 200,000 square feet, 500,000 square feet.
Those are at 9%.
Those are at 9%. So that is better than office.
Yeah.
Now, the vacancy rate for retail space is about 4%. It's about 5% or 4%, which is quite low in comparison to office space, which is at 24%, or industrial, which is at 9%.
Okay.
But if you come back, if you want to really see what is the best model over here, the best asset over here is the small bay warehouses.
The small what?
The small bay warehouse.
Small bay warehouse.
The small bay warehouses, the vacancy rate is 3.5 to 4%.
That's practically nothing.
That's nothing. And that's because that is in the biggest demand. The huge demand is there for the small bay warehouses because everybody wants to go into small bay. Why? Because small bay warehouses are basically of the size of under 10,000 square feet. So everybody who's a small time, operators, contractors, subcontractors, they all like to go into small bay warehouses because it's not huge investment.
Yeah.
The tenants are happier over there. So those are basically practically the details of vacancy rates.
Yeah, that's fair. I mean, typically speaking, with at least with Raveum, right? We always go pre-leased with corporate guarantees that are like 7 to 10 years long. So we try our best to sort of protect you from the downside of vacancy rates by giving you good tenants. And it's important to know this if you're doing a development deal, a construction deal, or you're doing a takeover with value add, these facts and figures matter. But what does, I think, shoot like above for Dallas is what I think is perhaps the most important thing, cap rates and IRR, right? Now, you've heard us go on and on about what cap rates are, what IRR is, and pretty much everything and below, right? So let's talk about cap rates, right? Cap rates are a key indicator of your return on investment or any deal. Simply put, that is your passive income play. That's your dividend play. When you make a property decision, what's the first thing you think about? Cap rate. Always. Yeah. It's not your IRR because property depreciation, okay, short stable in the US, but cap rate's guaranteed.
Yeah.
Right? So in Dallas, industrial properties range from 6 to 7%, which is pretty good considering that the average cap rate in the US is about 4 to 5% with good tenants. Office spaces is 8 to 9.1%. And that is very, very high for anyone who not knows. So we've done a property, Key City, that's a medical clinic, a vet clinic, that's 8.1. And that's considered very high on its own.
When a cap rate, you mean the cap rate is your rental yield.
Correct, yeah.
The cap rate means rental yield minus expenses and minus taxes.
Yeah.
And the cap rate in Dallas is about 8%, whereas the cap rate in India is about 1.5%.
Yeah.
So the difference is huge.
Retail 6 to 7.3%, but retail has a lot of downside protection as well because you're working in spaces that could easily move around. And lastly, multifamily. We typically don't do many public multifamily deals because the cap rate is often low. In Dallas, you have between 4.9 to 5.9%. But multifamily has extremely strong downside protection. There are so many external forces that protect multifamily investments. High schools, public living, household employment. These are things that really give you a lot of downside protection in multifamily, but that is also lower cap rates, right? So from an investment perspective, these are decisions that majorly power your growth. And beyond that, Dallas was ranked number 1 for commercial real estate in 2025 by PwC, a very reputed third-party auditor for the market. And you'll see a very strong, stable appreciation in terms of property growth. And the IRR is consistent, almost 9% on just stable growth. And all of those come together to show that Dallas had extremely strong recovery post-pandemic and has had stable employment growth. And I think from a pure investment perspective, vacancy rates being low in certain sectors, very, very strong cap rates in most sectors, strong recovery, and the strongest commercial market definitely have it as a contender for not the best real estate opportunities in Texas, but in the US, I'd say. And there are so many tax benefits, right?
Yeah, I mean, Texas has a great benefit because it's a zero state tax. And Dallas, being part of Texas state, has no corporate tax, has no personal income tax. So there is no tax. The only tax you will end up paying is the federal tax, which everybody pays. Plus, Dallas, being part of Texas, gives you a lot of other incentives and lots of other support to investors. Let's say if I want to make a investment and I'm looking to get some financial assistance, then there is Texas Enterprise, which is out of common, where you can you can look for the fund, Texas Enterprise Fund, and you can try and get some investment or financial support.
Okay.
Now, if you are making an investment or if you are doing a business which is going to bring in manufacturing, which is going to bring in oil or any kind of manufacturing, then the government of state of Texas will give you 100% exemption in the sales tax.
That's huge.
That's huge. I mean, 100% sales tax exemption, where do you get?
Yeah.
We don't that kind.
Yeah, and that's why vacancy is low because new businesses can come and flourish as well.
Yeah.
And that is what you call a holistic economic development area.
And there is a huge exemption also that they are providing in data centers. So if you are putting up a data center over here, there's 100% exemption on sales tax again. Yeah. So they are trying to see how they can help an entrepreneur establish a business in the state of Texas.
Yeah. And this may be a too early sneak peek for next week's video, but Abilene, right? Huge data center. OpenAI, the biggest data center in the US for AI development, but we're not going to go too deep into that right now, but that's a very, very important fact.
Yeah, we need to discuss that as another point for sure.
Okay, so clear benefits across the board, right? Clear benefits. What type of properties should someone be looking like looking at in Dallas from your perspective? Because you've been more researching Dallas a longer than I have, so there's a lot I could learn over here.
So I think I kind of find three type of properties which are really good for one to make an investment. I would say medical properties are really good. Then I would say you can go into flex space. Then you can go into retail. These are three areas where you can make your investment and you will get a good cap rate.
Cap rate.
Yeah, that's what is important.
Okay.
Yeah.
So those three.
Yeah.
But if you had to go in the market right now, what deals are you gonna do?
So if I have to go in the market right now, and if I'm not able to find any property in Dallas, in terms of medical or flex space, then I would say, now this is very important. There are three major cities which are coming right next to or in the Dallas metropolitan area. One is called the McKinney. McKinney has around a population of 195,000 people in 2020, and now it is sitting over at 224,000, which is increased
Huge growth.
huge growth, which is 15% growth, which is huge as far as Texas is concerned. 15% growth.
Yes. Quite up.
Quite high. Now let me tell you another, this is the biggest. There's another city which is near Dallas called Selena. Now Selena is not a growth. There has been a transformation. In 2020, there were only 17,000 people living there. Now it is 64,000. So there has been an increase of 290%.
17 to 64,000.
Yeah.
That is being the local resident over there.
Yeah.
That happened.
So this is like a place where where if somebody wants to really grow their money, get in there.
Well, yeah.
Yeah.
Clearly, you could have gotten great prices when it was 17,000. You
Yeah.
almost doubled your money. How far from Dallas is Selena?
Oh, it's Selena is about, I think, 1 hour, not even 1 hour, about 40 minutes by car over there.
Oh, that's nothing.
That's nothing.
And in the US, that's a
Yeah.
very, very common drive to make.
The third location is Melissa. Now Melissa is like a quiet overachiever,
Quiet
I call it quiet
That's the
overachiever.
name. Quiet
Yeah.
overachiever.
In 2020, their population was 14,000, and now it is already over 30,000. So there's a jump of 114% in population over there. So it's growing. It's just flying under the radar, but it's doing good. So these are places where you can make your investments. Now, let's say what is good, what kind of, I think what we need to know is what kind of tenants are good.
Yeah.
If you're looking at, right?
Yeah, but okay, that doesn't have to be just these three areas, but in Dallas in general, what tenants would drive you to be like, yes, this is where I want to put my money. This is where I see opportunity.
I think when we are looking at, I would say if you're looking at flex space, look at e-commerce logistics.
Okay.
Look at companies like FedEx, UPS, then look at in your light manufacturing, look at electronics and auto part companies. When you're talking to, again, some medicals, then you can look at dental clinics, you can look at veterinary properties. These are all the different tenants that you can get for the properties. And if you're doing a retail space, then you can easily get a bunch of McDonald's. You can get, Wendy's. You can get Burger King. So there's quick service restaurants
Yeah.
which are out there.
That's fair. That's fair. I think also for everyone listening out here, there are also two factors that determine, whether it's a good opportunity to invest or not. Other than the obvious tax exemptions, cap rates, IRRs, vacancy rates, and those are zoning, number one, submarkets, right? This is what differentiates a good opportunity from a fabulous opportunity. Right? And Dallas has a lot of those, if I'm not mistaken.
Yes. Dallas has fabulous opportunities of submarkets also.
Okay, and what do we have? What are we working?
So when you go towards South Dallas, then it's like a logistics beast. You got the Amazons, you got the FedEx, you got all the big warehouses that you get. So all based in South Dallas on I-20.
Okay.
Then when you go to North Fort Worth, then those are basically huge spaces, master planned areas. So you can get your large scale warehousing over there. Or you can go to the Great Southwest, where is mostly Arlington side, and that is another area where you can easily have great warehouses and industrial spaces over there. So I mean, If you're doing retail, then your focus should be in areas where there's going to be good population in those areas like Frisco, Allen, McKinney. If you're going into areas where you want to have high income population, then you go into South Lake, and Grapevine. Now, if you want to have if you want to get into coffee shops and business like that, then you go into East Dallas, Lower Greenville. So yeah, I mean, those are the areas which you should concentrate on.
Yeah, that's but this is a lot of information about real estate, right? It's a lot to digest. IRRs, cap rates, vacancy rates. It's a lot. Let's take a quick second back over here, right?
Yeah, I think we should take it easy.
We figures, we with facts, we hit them with this, that. Let's just take a second over here. And I want everyone to know this is a very interesting thing. So everyone who goes to an ICSC, IGCSE, IBDP school in India will know that you have to use something called a graphing calculator. And most graphing calculators, I'm not sure you know, are called Texas Instrument calculators.
Are there?
That's from Dallas.
Okay.
And let's talk about it. In 1958, the microchip that powered the Texas Instrument calculators and still powers calculators to this day came from Dallas.
Is it?
A small chip that made everyone who did mathematics in India's life hell. Basically, you sit there and you try to figure out how the GDC works. I remember it took me a good week to figure it out when I was in the 8th standard or something.
Wow.
Yeah. But, but despite the calculator being tough to understand and all these things that are happening, and despite this being made perhaps heavy to go through, there is significant reason why you as an Indian investor should care about this market. Why is it that we're talking to you about vacancy rates? Why are we talking to you about IRRs? Why are we talking to you about cap rates? It's because you as an investor stand to gain from this opportunity. Now, I try my best over here not to consistently sell Raveum as a platform. It's not about Raveum, it's about what truly are the opportunities in the market that we are bringing towards you. And the fact of the matter is that 6%, 7%, you were talking about how it's low 2 seconds ago compared to 8 to 9%. That is significantly higher than what you get in the Indian subcontinent.
Yeah.
And that's why it's such an aggressive contender to be such a good alternative investment platform.
Absolutely.
Right? Especially in the US with passive income, with all these guarantees, it's a strong contender. And that's why you should care. Because despite even the average property here giving you considerably better rental rates, there are so many opportunities for you to ensure you can grow your wealth over here. Especially, you're complying with the LRS, the Liberalized Remittance Scheme, right? We're complying with come by working with regulated AD banks. And you're going through these different steps and measures to ensure that you're getting fractional ownership at the base level. And that's giving you consistent passive income. And fractional ownership, I know it's a new concept. I know that it's not been in the market for too long, and that's the number one question we get, right? I'm sure you've been asked what fractional ownership is, right? Yeah, this is not new to you. Yeah.
I think you need to take a pause and elaborate a bit more on fractional ownership.
Sure. Fractional ownership in its entirety basically means that someone does not need to spend $1 million to own property in the US and get all the benefits of rental passive income, stable tenants, US dollar appreciation, so on and so forth. Fractional ownership allows you to spend as little as, let's say, $1,000 and co-invest alongside hundreds of other investors in that same very property, getting you the exact same benefits proportionate to your investment. So your $100 goes as far for you as someone else's $1 million would go. It levels the playing field. That's what fractional ownership means. It's simply a way to co-invest alongside a community of investors of like-minded people, and everyone get the benefits together. That's it. It is not complicated. It's as good as imagine, let's say that you and your friends wanted to buy a house together, right? Now, instead of one person having to spend a crore, 10 of you come, spend 10 lakhs, and you share the property. And when the property gets sold, each of you take 10% of the net proceeds. That's all fractional ownership is.
So anyone can invest as low as 1 lakh rupees?
Yeah, with Raveum, we made it so that with our premium properties, you can invest for as low as 1 lakh rupees. And we have done offerings and will do offerings that allow you to invest for as little as 10,000 rupees also. You have an equal footing in the US real estate market with us.
So let me ask you one more question. So if I'm an investor sitting in India and I have decided to make an investment of 1 lakh rupees in US,
Yeah.
I will be worried about my money. I will be worried about the security of my money.
So when it comes to security, I think that was the main thing that we work really hard at Raveum to solve. Everything is managed by a very, very encrypted platform. We have type 1, type 2 compliance. But more importantly, we work with regulated AD banks like Kotak Mahindra Bank in India and Private Citizens Bank in the US. Your money transfer happens when Kotak comes to your house. They're aware of the fund. They know exactly what we're doing, and we have registered with them. Once they actually come to your house, they initiate the transfer not to Review, but to a citizen's bank account for that particular fund. So at no point is the platform even having a chance to come interfere. And we have put all those security measures in place to ensure that you, as the investor, can rest assured about your investment. And once your capital reaches America, it gets deployed on its own. And instantly, you are invested in a fund that comes under the regulation of the SEC, under the exemptions of Regulation S, and under the purview of Regulation D 506C races. It's as simple as that. And that entire elaborate structure, scheme of investments took us a few years to get to that. But now we can rest assured and offer that service to the masses.
That will give a lot of satisfaction to any investor.
Yeah, the SEC regulation has exemptions, and definitely working under the FEMA Act with the RBI and working with local AD banks and having all these extra steps be there. Yes, it's cumbersome as an investor, but it gives you that added layer of protection, and it makes you feel secure about your investments, especially wanting to adhere with government bodies is an active decision that we made rather than work around them and circumventulate them. And I guess all those come together, and that's what the security and the beauty of what Raveum is. That's what it is.
That's good.
The underlying aspects, We spoke about regulations, facts, and figures, but the heart of the matter is any deal you're going to do in Dallas anytime soon?
Yes, I've done the deal in medical, and I'm in the process of finalizing a flex space.
Okay, all right.
Well,
Finalized.
Well, let that happen, and we'll talk about it when it's done.
Yeah, we keep it close to the chest.
Yeah.
All right. And I think next time when we come back, we'll be talking about Abilene and what's happening over there with these huge data infrastructure centers and the fact that one of our first offerings was actually in Abilene, Texas.
And I would like to remind our viewers, if you have any questions, please write to us and we will get back to you. Thank you.